All right, good morning, trade pros. Welcome to our morning market update for, well, the camera's all the way back here. For Wednesday, June 13th of 2018. It's a big day. It's officially Federal Reserve Day. I'm going to talk to you about what's important in this meeting, what to watch for, and what's not important. And um, ironically, but not coincidentally, the things that most traders think are important today are not. We have some sub themes going on to this Federal Reserve meeting that I want to share with you and talk to you about. So today we're going to go into that. Also, we're going to talk about oil. There's been some developments in the oil market overnight through Russia's attempt to increase oil production as well, and the EIA put out their monthly crude oil report, and we're going to break some of that down. So let's get started first by taking a little trip across the markets. In Asia, Japan's up 0.4. Hong Kong's down 1.2%. So Hong Kong got hit the hardest in Asia. China's also down 1%, and India's up 0.1%. So you could see there's some weakness or bearish undertone to this market to start the session. In the Asian markets, in Europe, we picked up the pace a little bit, and we were green across all markets. London was up 0.5%. Paris is up 0.3%. Frankfurt's up 0.2%. A lot of that's on the back of Theresa May's win. She came very close to a loss. And for these Brexit negotiations and the hard versus soft exit, we're not going to get too much into that, but Europe is optimistic. In the United States, Dow Jones is up 0.1 percentage point. Dow is up 0.2%, and Nasdaq's up 0.3%. So once again, Nasdaq and technology stocks are leading the way in the markets, and that's not a surprise to us. In the crude oil market, prices are down 0.2 percentage point. We traded down to 66.26 and currently trading 66 even. The pit session open is officially 65.99, right around that 66 level. So we're going to probably find some support here on crude, but there's a big inventory report coming out. Today's going to be a massive day of volatility. Inventory for crude oil at 10:30. That's the trade that we, on a weekly basis, explore for opportunity. In 1 hour of 1 week, you can make your entire weekly income. On some days, even your entire monthly income. It's that big of an opportunity. They can't afford it to be missed. That's at 10:30. And today we're opening up the trading room for our subscribers at 1:45 p.m. Eastern. So we're going to kind of do a double shift, and we're going to trade the Federal Reserve FOMC meeting together as a group. So if you guys want to check out what we're about and you want to check out the trading room, this is a great time to do it. 14-day money back guarantee. So it's literally risk-free for you to pop in today and have a look at the trading room. You're going to get double duty, 2 shifts today. All right, for the price of one. Gold market's down 0.1%, but stabilizing. Bitcoin's down 1.6 to 64.43. I'm going to go ahead and call it. Volume is coming out to the downside on Bitcoin, and I think Bitcoin and cryptos have another leg lower to make next. Next move on Bitcoin, I could see it dropping down to 4,100. That's the next support. And if we break out these lows that we're trading on at the moment, we're going to get down there relatively quickly. On today's news calendar, we have the Atlanta Fed business inflation's expectations at the top of the hour, 10 a.m. Then at 10:30, we have the Department of Energy's petroleum inventories or crude oil inventory statistics. 2 p.m., we have the FOMC announcement, where that's not going to be where the volatility is going to be around. It's going to be more so around the FOMC forecast and press conference. All right, so we got a lot of stuff today. We got a ton of things that are going to give us volatility and opportunity as day traders. Let's talk about the Fed. All right, the Fed today will hike the interest rate. That's not a surprise. The market won't react to that. If it was just about a hike or not, and the hike happened, the market wouldn't flinch because it's already been priced in. The probability of this rate hike has been above 90% for the last couple months. So it's not really about this interest rate hike. The hike is going to happen. The things that we're more interested about is Jerome Powell's press conference, and there's a few things happening here. The other thing you want to look at, and most importantly, is the Fed dot plot. What the dot plot is, all voting members of the FOMC, the Federal Open Market Committee, put a dot as to where they want interest rates. This year in 2018, what the rate should be, all right, 2019, and then longer run. So if that curve steepens, it means there's higher expectations for an increase of interest rates. That's not priced in the market, right? There's suspicion the Fed wants to get more hawkish, which means they want to raise rates more, but that has not at this moment been priced into the market. Any hawkishness will have to be repriced into the market. How will that look? A hawkish Fed, which means they're going to say in 2018, by the way, we expect 3 interest rate hikes. This is going to be the second. if the Federal Reserve makes mention that they're getting more confident with the strong labor market and the upticking inflation that we just saw yesterday, they could say we're looking for 4 interest rate hikes in 2018, which would look like March, June, all right, September, December. That would be the 4 hikes mid-month. Those are their 4 quarterly meetings. If that happens, look for a sharp rally in the US dollar, look for a sharp decline in gold, and equities will be mixed. Initially, it'll be a bit of a bullish signal because higher interest rates means stronger economy, which means a better stock market. But as that market digests the info, it gets bearish. Typically on these events, when there's a hawkish tone, the market will rally initially, and that's an opportunity for you to sell that rally and ride it down for 10, 15 handles. This market moves very fast, very liquid, very illiquid at some levels, but very fast, and that's why it's not as liquid at all price points. If you're trading this market through the FOMC, you can't be going big size because there isn't the availability for big size because it moves so fast. Any one level on the ladder doesn't have adequate liquidity to get a big position in. So you got to sort of work multiple levels on the ladder to average into a position and then get filled and let it ride down or up, depending on what the report is. That's what the Federal Reserve is looking for. Dot plot their economic forecast. If we get a really, really bullish forecast, they're saying the economy is doing great, that's going to put some downside pressure on markets because a strong economy means higher outlook for interest rates. And that's sort of what the market's waiting to hear and see. One of the biggest parts of this conference that we haven't had before is Jay Powell going to announce that he's going to do a press conference at every single FOMC meeting? Just to remind you guys, the FOMC meets once a month, and they publish those reports the following month on what the meeting minutes were the previous month. And in addition to that, the quarterly meetings are the ones where they have an official press conference. This is the opportunity for people to ask Jay Powell questions, and the way he answers them puts volatility in the market. All right. The thing that could potentially happen today is he could say that we're going to have a meeting every single month. We're going to have a press conference at the end of Fed meetings and meeting minutes every single month. What that would suggest, and I mean, most traders look at this and shrug it off and say, so what? Let him answer questions, more volatility, right? Well, that would suggest a hawkish tone. That would suggest the Fed is getting prepared to really start raising interest rates. And you know, there's always a possibility to raise it 2 points at a time, not 2 points, but half a point, because they raise in quarter of a basis point, which is 25 basis points, quarter of a percentage. And if they start to do press conferences at every single monthly meeting, that means they could raise at any point. That's going to be a very hawkish statement on its own. That's sort of reading between the lines. It's not going to directly say we're going to start raising rates, so I'm going to do press conferences, but that's what would be the intent of a press conference, to justify that interest rate hike plus to answer questions about it. So in today's Fed meeting, it's more important than any other Fed meeting. This is a potential historic Fed meeting. So we're going to be trading it live together, and I hope you guys are prepared based on a little bit of this review. That's what I got for you guys. Moving on, weekly API oil inventories, crude oil yesterday at 4:30 p.m. showed a draw of 700,000 barrels versus a minus 2 million prior. Therefore, a little more bearish of a report. The draw was less, and we're going to look for some of that confirmation today. We're going to trade that at 10:30. We're going to do more analysis right before, so I'll save that. Russia today reportedly at 4:20 yesterday asked for oil cut rollback for most OPEC nations to propose 1.8 million barrels per day shared output increase. So they're saying Russia's coming to the table now and saying, hey, we agree with Saudi Arabia. The prices have been firm. We've kind of got what we wanted out of this production cut. Let's increase the production a little bit because Venezuela and Iranian oil has been taken offline. So if we increase it a little bit, it'll kind of make up for that. And on top of that, demand for gasoline tends to go higher in the summer. People take more vacations, more driving, more commuting, and that also puts demand a little bit higher. Therefore, it should balance out to be neutral, right? Well, right, but the thing is with the market, it's not what happens, it's what's expected to happen. That's the important driver of markets across the world. So if that was to happen, and Russia and Saudi Arabia are now coming to the table saying they want increased output, other nations are going to want increased output. And the idea behind increasing the output early in this agreement kind of invalidates the agreement a little bit. All right. it was solidified to the end of December. Now they're doing it early. So start to watch for some bearishness in oil. And if you're trading oil, you absolutely have to have a news wire. It should be illegal to trade oil without having a live news feed, honestly, because the news moves the market that much. You could pay your news feed within one trade, within a couple of minutes if the news is good. So watch for oil today. Russia's coming to the table. They also want increased output. They say they're going to continue their cooperation with this OPEC agreement, but they're coming to the table with an ask of increasing output collectively for this agreement. Crude prices, here's the report that came out from the International Energy Administration's or agency, International Energy Agency, tongue twister, IEA's latest monthly report. Their forecast for 2019 is that demand's going to grow by 1.4 million barrels a day. All right. That's their expected demand increase next year. So it's pretty far out. And they're saying the problems from Venezuela and oil is going to require other producers to produce more. It's not a problem. Saudi Arabia's leakage from the oil pipeline will replace that. So that's what you got in oil. You got pressure from these producers wanting to put out more supply, which is going to put some downside pressure on prices. Question is, how will demand fare this summer, and how will the market take that information and price it in? So that's what you're looking at. Oil and the Fed today. Just a quick reminder, once again, we're going to have our trading room open at 1:45 p.m. today Eastern in preparation for this historic FOMC meeting. This is going to be one of a kind. If Jay Powell announces quarterly conferences, there's going to be a lot of volatility in the market as traders put on their hawkish bets. Higher expectation for higher interest rates. Gold's going to go down. The US dollar is going to go up. Markets should be bearish. And I say should. And in this environment, bonds will move lockstep with equities. Usually we use bonds as a divergence indicator, is a negative correlation. Today, equities and bonds will be positively correlated. Keep that in mind. All right, guys. Good luck out there. Good trading. Hope to see you in the trading room this afternoon. We're going to trade this Fed event with our group. We're going to trade it live. And I have no doubt in my mind we're going to kill it. And I have no doubt in my mind you will as well. So good luck to everybody. Manage your risk. Trade like a trade pro. Remember, this morning on the market open, you could see a little bit lower volume, lower volatility as traders await this Fed announcement. So you could see more range bound, less trend, less momentum type trading. Low volume, range bound, low volatility, low inventory across the ladders, which means what you should do is reduce your trading size, reduce your trading frequency, and take profits and or losses, cut losses quicker. All right, that's all I got for you. You should be well prepared for the day. Good luck. I'll see you tomorrow at 9 a.m. Manage your risk, trade like a trade pro. Goodbye. We got a lot of stuff today. I'm excited. Today we make bank. I got a wedding to pay for. See you later, YouTube. Thanks for tuning in. Kick you.